Good morning, everybody. Happy Tuesday, August 8th, 2023. We're seeing the markets continuing their pullback after yesterday's rally. So keep in mind higher time frames, as we talked about yesterday, we're in more of a correction move to the downside, while the higher time frame trend is still to the upside. So as we're in this corrective move, we need to anticipate ways to splice in with those short breakout trades to the downside and pullbacks into our sell zones. Not a whole lot of updates to our equity index grid here, but keep an eye on some of our breakout trade opportunities. If we do start to see more momentum to the downside, I believe it is an outside day on the S&P, the NASDAQ, and the Russell at this point. Dow is the only one that is currently still inside day. Therefore, we have to wait to take breakout trades on that one. But S&P, NASDAQ, Russell, good to go with the breakout trades. Just make sure that you qualify them and looking for the three touches, like base group of candles first to manage risk, and then we can look to take those breakouts. Updated this one on the NASDAQ. We broke out from yesterday's breakout trade just by a little bit and started pulling back. If we start to see more momentum to the downside through that support area, we'll be looking for that next move to continue lower. Breakout trade to the downside below 15,318.5. All right, and then trading tip of the day with the equity indexes continuing their correction move to the downside, monitor for ways to splice in with short trade opportunities. What's in the news reflecting more of this pullback that we're seeing? U.S. stock futures slip after weak China data dampened sentiment from MarketWatch, and then coming over to Yahoo Finance, stocks slide amid worries about U.S. banks and China. So overall, we're seeing more bearishness coming in, not a whole lot of buying at this point. We'll need to monitor the trend. That was a big odds enhancer yesterday. Seeing that reading above 3 indicated some buying. So we'll check in on that today as we are seeing the pullback continue to the downside. Economic reports, we already had the big one come out, international trade in goods and services about 30 minutes ago, 8:30 a.m. Eastern time. Moving forward, we'll just have wholesale inventories at 10 a.m. Eastern time, 10 o'clock reversal time. Not a market moving economic report, so not anticipating this to directly impact the equity index futures markets. Keep an eye on our other prep screen as well, several areas where we're approaching either buy zones or sell zones. So make sure you have these areas marked, as well as any areas where you identify the dead space. So take a screenshot of that. And then we'll recap at the end, go over our open buy and sell zones, so you have these moving forward. Coming back out to, so I mentioned this yesterday, just want to remind everyone our Mastering the Charts 3-day event is coming up August 26th, 27th, and 28th. So if you haven't registered for that yet, make sure you do so. Coming up in a couple weeks, going to post the link in the chat. Those of you who are in our database, which everyone here is, should have received that email with the link to get the discount for the 3-day event. So if you have any questions on our Mastering the Charts 3-day event, feel free to email us at theelitetrade@gmail.com. All right, I'm actually going to start with the trend. This was, again, a big odds enhancer for us yesterday. So currently in the pre-market, we're at 1.02. So trend isn't quite as high as yesterday. Remember, we had a reading of 3, and then after that high reading, we saw a pretty substantial move to the upside on the equity indexes. Currently, the trend is at 1.02. As far as looking for a high reading to indicate some buying, we want to see the pre-market trend above 1.5. So not really seeing a whole lot of buying coming in at this point. We'll want to monitor this throughout our session to see if it pushes higher. But in the interim, we may see more of a pullback until we find where the big banks and institutions are really starting to buy up the markets as they're dropping. All right, back out to the news. So again, more on the bearish side from what I'm seeing. Took a look at Yahoo Finance. You can see the bear on the main screen here. Sell the news is dragging on stocks after earnings beats. Stocks slide amid worries about U.S. banks and China. So coming over to Yahoo Finance, very much on the bearish side. Market watch as well. Main article here, US stock futures slip after weak China data dampened sentiment. So overall, very bearish. I would say just monitor your buy zones. We may see some bear traps coming into play as the markets are dropping. However, the trend really isn't indicating a lot of buying coming in at this point, with it being still pretty low at 1.05. And then coming over to Econo Day. So as mentioned, we already had international trading goods and services. Moving forward for our session, we'll just have wholesale inventories at 10 a.m. Eastern time. And then that one is marked with the black dot. That one is another key indicator. So not a market moving one. Typically, we want to look for the ones with the green diamonds or the red stars. This one's just another one that we'll want to keep an eye on at the 10 o'clock reversal time. Hey, Chris, let's see, prep screen was blank. I'll put it back up one more time. So yeah, the two prep screens we have in this one, not a whole lot of updates to our buy and sell zones, just because yesterday we had a big move to the upside. That was all pretty high volume. And then in the overnight session was when we had more of that corrective move back down on light volume overnight session. So there's a couple overnight session zones that were formed. However, I try to stay away from those just because there isn't as many orders filled in those overnight session zones. So keep that in mind. I'll go through that as we go through the equity indexes. Yeah, of course. All right, starting with crude oil, working out nicely from our 15-minute buy zone. So notice the location isn't quite in the best location. We don't have the 3 touches on the left. We don't have the breakout. However, it was a leg base zone that was formed on high volume, which we can see below. So it's working for a little bit, but I'm not anticipating a long running move from this area due to the location. So that we teach all in the Mastering the Charts event. Anticipating this to just get a bounce, coming a little bit lower, we'll have our next support area where price has already come down and tested at $78.50 range. Once, twice, 3, 4 times. There may be some more unfilled orders at this point, looking for another bounce, but then got to identify where our next buy territory is at. It's gonna be just a little bit lower. So kind of mapping out the where price is and where we're anticipating price to go. Our buy territory is a little bit lower with our buy zone down at 75.64. Again, keep that in mind. Buy zone within our buy territory, 5 points lower. We're getting a bounce off our zone, but it's in the wrong location. We did get that breakout trade yesterday, so hopefully some of you got in on that. Actually, in the overnight sessions when we finally got that breakout to the downside. So looking for crude oil to move lower through the tested support areas down to our buy territory. I would say this support area, we may still get a bounce off that, since we can see there were previously a large stack of unfilled buy orders at this point. All right, S&P, start off on the daily chart. So pretty big uptrend since back in October of last year. So we're in more of an uptrend, looking at this as a correction move and a pullback down into where our buy zones are located. So just keep in mind, as we are getting this pullback, our buy zones are a little bit lower on the S&P. Our nearest one being at 44.55, so about 50 points lower. In the meanwhile, it is an outside day. So prior session's high and low. We broke the prior session's low just by a little bit. Therefore, it is an outside day to the downside. With it being an outside day to the downside, we can look to take breakout trades lower, in addition to pullbacks into our sell zones. So we'll keep an eye on the S&P dropping down to the 1 hour. Down to the 1 hour. So looking for our sell zones. Again, we're keeping an eye on ones that were formed on high volume during the regular trading hours. But notice that this entire drop was after the market opened yesterday. So we opened up high, and then since then we started dropping to the downside. We got that correction move lower. So no real high volume sell zones were formed in the overnight session, which is why there's no real updates to our prep screen zones. So knowing that, and this is all pretty light volume, we could see a move back to the upside, but just take note of where we have our high volume fresh zones. S&P nearest one, 4562.75. Stop at 4570.25. So market's pulling back. We'll keep an eye on IBM, Goldman Sachs, and that's why I'm looking for those breakout trades, because we don't have any close high volume sell zones, but we can look to splice in with those breakout trades since we did break the prior session's low. Taking a look at the Dow 30 stocks, we have a lot of Dow stocks down over 94 cents. So let's see, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 Dow stocks down over 94 cents and 1 up. So 11 down, 1 up, net those is going to be -10 times 2 is -20. Cash is valued at -20. Futures are trading at -32. So if cash is -20, futures are trading -32. Are we overbought or oversold relative to the cash market? Great job, Liz. Definitely want other people to try to incorporate this. It's a great odds enhancer, again, just for understanding once the market opens, are we anticipating more of a rally? Are we anticipating more of a drop? So as Liz mentioned, we are oversold by about 12 points. What that means for us in starting our session is that if we're oversold, we'll look for price to rally up to balance out with the cash market once the market opens. So oversold, futures being valued less than cash, we look for futures to rise to balance out with the cash market about 12 points or so, which would put us right about 45.16. Nothing really there. That was just, again, from the overnight session. All right, S&P, we've done that. Coming over to NASDAQ, similar picture. So prior session's high and low. We broke the prior session's low just by a little bit. So therefore it is an outside day, looking for those momentum moves to the downside. We're getting a little bit of a pullback at this point. Therefore, if we do start to see some more momentum to the downside, looking for this to be a full breakout down to our next 10-minute buy zone. Coming down to the 1 hour. Again, we have 1, 2, 3, 4, 5 tests. That was our breakout from yesterday and today as well. So looking for the NASDAQ to break, taking that breakout below those tested support areas is going to be below 15,318.5. So 15,318.5 for that breakout to the downside, and also looking for our high volume sell zones. Again, this entire drop was from yesterday's open, where we just dropped on pretty light volume from the highs. So no high volume sell zones that were formed in the overnight session. Our nearest high volume sell zone is going to be up at 15,574.25. So keep that in mind when you are looking for zones, even though it may look like there's a couple leg-base groups of candles in this area. We take a look at volume and we can see most of this was formed in the overnight session. We'll monitor Apple, Tesla, Microsoft, Google, Meta, and Amazon to gauge where they're going. Are they correlated to anticipate where the NASDAQ futures market is going to be going? Russell getting more of a substantial move lower. So we did break, again, the prior session's low. So outside day, looking for more momentum moves lower. Coming down to the 1 hour, we run into the same situation of looking for our high volume sell zones, which a lot of them are going to be further away. So coming down to the downside and looking for ways to splice in, we do have this dead space. So remember, dead space, you have 3 touches on top, 3 on the bottom. That's the dead space. Typically, price moves pretty easily through those areas, which we're seeing at this point. Not a whole lot of buying coming into play. Price breaking below that dead space and even that tested support, we could look for the next momentum move lower. So Russell breakout trade to the downside. It's going to be below that dead space, below 1937.4. And then below that, really just a pocket of points down to our next 3-minute zone, 1917.5. Again, just looking for ways to splice in, breakout trades to the downside because it is outside day, pullbacks into our sell zone. Sell zone is going to be a little bit further away due to the ones that were formed on high volume. And lastly, the Dow. So a little bit different here. Can't take breakout trades on the Dow because currently it is the only one that is inside day. Prior sessions high and low. Currently inside day as we haven't broken the high or low. So anticipating a little bit choppier market conditions, more elevated risk on the Dow. Keep that in mind in comparison to the other equity indexes, but still monitoring this support level as we do move lower on the Dow. So we talked about this one yesterday, price base, we came down once, twice. Price is dropping now, looking for at least that third test, find some unfilled buy orders, and then coming down into that dead space to the left. Our near zone is much further away, down at 34,734. So again, if we can get that breakout trade to the downside, we've got that pocket of points down to our, down to our next opposing 10-minute buy zone. Okay, indexes, all correlated, no surprise there, all of them continuing their moves to the downside. Bonds are inversely correlated, so nice picture here. Equity index is moving down, bonds moving higher. We're seeing that inverse correlation between the two, which is a better indicator for the market conditions for today. Trend we've been monitoring, so we've been seeing it spike up above that 1.5 mark. We've been seeing some buying coming in, just hasn't really been sustained at this point. Let's take a look again. Let's come back out to our pre-market trend. Still pretty low relative to yesterday. So again, remember yesterday we were above 3 in the pre-market and we saw a lot of buying. Currently our trend is 1 in the pre-market, not as high as yesterday. So we may not see as much of a push to the upside. Conversely, we may see more of a move to the downside. So trend is low, time to go. We'll keep an eye on the tick, advancing issues over declining issues. And then the VIX has been overall moving to the upside, currently at 17. As the markets have been pulling back, we're seeing some more fear and volatility coming into play. All right, lastly, our pre-market indicator did have another gap down in the pre-market, more down ticks and down volume, a little bit more bearish sentiment. So overall equity indexes, S&P, the NASDAQ, and the Russell are outside day. So we can look to take breakout trades lower. The pre-market indicator is gapping down, indicating some bearish signals. Our pre-market trend is low, time to go. So everything put together is saying, you know, be a little bit more bearish today until we start to see these indicators change. You may see some more momentum to the upside later on. But in the meanwhile, trend is low, time to go. It's an outside day to the downside on the equity indexes. So maintaining more of a little bit bearish perspective as we are seeing this correction back to the downside. Daniel, good to see you. Hope all is well. Alrighty, so I'm going to pass it over to Jeff. We've got 10 minutes till the market opens. We'll see what setups he's got for today. Thank you guys. Jeff, all yours.
Good job on the entry there. Good morning, everybody. Welcome back, Daniel. About damn time, huh? Missed you, buddy. Everybody was asking about you. All right, we do have a couple things going on today. As far as the bull trap and the bear trap strategy, okay? It doesn't happen very often, but when we have it, we need to be prepared for it, okay? One of the big reasons we collect the data for the Globex high and low, okay, is we want to see what that range is. And we compare that range to the daily ATR, and I have the daily ATR down below. When the Globex range is greater than 75% of the daily ATR, okay, we want to find the bull trap and the bear trap. And what that really means is the first demand zone below the Globex low, first supply zone above the Globex high. The average daily range is the average range that price has been moving for the last 14 days, okay? So we take the high minus the low of the last 14 days and we average them out and we get the average true range, okay? Now, when I'm looking at the S&P, the NASDAQ, and the Russell, the zones below the Globex low are fairly far away, but they're great opportunities to wait for. The one that's really on the chopping block right now and ready to participate in is this little zone we found at the origin of that low of the session yesterday, okay? 35,206, 35,170. So I'm going to set this up ahead of time. We do have some additional economic reports coming out, and yeah, wholesale inventories at 10 a.m. So maybe it's possible that the Dow drops into that area, okay? For the other equity indexes like the S&P, we're still waiting for that leg base group of candles for the breakout. Currently, on the S&P, prices inside the prior session's range, and often gaps fill the same trading day when we're inside the prior day's trading range, okay? So there's a lot of things that are popping up here as far as opportunities to make a trade, but we're still going to be in that waiting mode. We're still waiting for things to set up. The markets being down this morning are kind of a shocker to some folks. I mean, it's a pretty substantial move, 29 points on the S&P to the downside from yesterday's close. That was the full range of the last 14 days, okay? We're also taking a quick look at the volume. So I don't want you guys shorting right away unless you have a setup, but the volume on the stocks 7 minutes before market open are fairly light, okay? Fairly light. So this is why we bring in additional information to see what the dollar is doing. The dollar just ran up into support or resistance, excuse me, and potentially getting a breakout to the upside. And let's see what's above there for now. Okay, so a breakout on the dollar goes right back into supply and a new resistance area. I'm gonna find the right tools here. Okay, so we have a little pocket of points before price gets right back up into that area there. Okay, right now the dollar looks pretty bullish on a 3-hour chart, and we drop down to the 15-minute chart, just kind of see where we're at that resistance, and we look for the opportunity of where we could splice in again. And we're probably looking right down in that area. Let's try a 14-minute, 13. There we go. 13-minute chart gives us the leg base group of candles. Okay. Now, as we mentioned yesterday, okay, it appears that the markets and some of the other products that were very inverse related to the dollar are starting to change, okay? Now that generally happens when we start going from an uptrend to a downtrend or a downtrend to an uptrend. So something's changing right here. The other thing that we pointed out is that the late day rallies, okay, were to the upside in an uptrend. And now we're starting to see some of the later in the afternoon even after market close, we're starting to see some of the bigger drops. Okay. So we started seeing that on Thursday, Friday last week. So we're starting to anticipate that the markets are now in a downtrend. On a daily chart, we're still looking at 44.87 is an X88.6, 44.59, the 50 simple moving average. We want to watch that. When price starts getting close to that 50 simple moving average, we want to be prepared to, if it closes below, then we have a sell program for a couple of days, okay? If it's just a bouncing off of it, we want to know when we're getting close to it, okay? That daily 50 simple moving average is a big deal for the banks and institutions, okay? And often the retail folks will jump out of positions once price closes below the 50 moving average and then re-enter when it closes back above. Okay, these are things that have been happening for many, many years as traders start to use those moving averages as a place where they either enter the trade or they get out. Okay. Oh, sun's coming out now. I had a nice little storm this morning. It was a lightning storm and just before sunrise, and now it's sun's coming out. You know. All right, so let's get the Dow set up just in case we get a reaction on that. 35,206. Looking to go long. I know it's pretty far away down. Okay, but I'm going to put an order there. We have about 30 points risk on that trade. Okay. Russell and S&P and NASDAQ, we're looking for continuation of that breakout. Okay, the breakout trade. But we do need a leg base group of candles form. Okay, now the NASDAQ did break below the and we had an entry yesterday for the breakout and kind of got that fake breakout and price bounced back up. Now it happens from time to time. Okay, what we have to do is be prepared that once it does that, there's really no more buy orders there. We're looking for price to continue to go through, and we'll look for that leg base group of candles. And it would be nice to have it right there before taking that breakout trade. Okay. So we're still looking for a breakout on the NQ below that 15,033, but I need a new leg base group of candles before that breakout. And same with the S&P. The daily ATR is 45, and we had 44.25 for the overnight. Okay, so we pretty much did the whole daily range. Okay, so once the whole daily range is done in the Globex range, the best trades are when we're outside the Globex low or Globex high, which is more of an extreme. And you may even, if you understand Bollinger Bands and how they work, those can show you some price extremes around those areas, okay? Market's going to get a shakeup now. I mean, this is pretty big news out of China, and it's going to impact oil and such, okay? The open range breakout trade on oil did go back to the upside. We have to consider that most of this drop in the overnight session was on lighter volume with crude oil. Okay, we also seen that heating oil has came down and found support. Okay, so I'm just kind of patiently waiting. That first 5-minute candle was right at my limit as far as what I used to take a trade. Okay. All right, natural gas, we're still on a large time frame, right at that resistance area. And even on a large time frame, we have a smaller resistance, okay? Now, this is a a price pattern. I don't usually teach this, right? Because most of you are not ready for it yet. I'm willing to share it with you, but a couple things to keep in mind. Notice that we had this area here that where we have that resistance, and then we have another resistance forming below it. Kind of like a level on level. Now, we won't call it a zone on zone because it's resistance and resistance, okay? But very often taking trades on this lower zone, okay, we have to be aware that this is actually a speed bump, okay? So the speed bump areas are where price pops in, and it takes a little while to kind of get through that, okay? So when we talk about speed bumps, often we can look at the larger time frame, and generally a speed bump is what we consider an area just above a breakout trade, okay, a resistance or below a support, okay? So we have perfect resistance area, but then on the other side we have that speed bump, okay? When you have that level on level like that, more conservative trades are going to be taking the breakout. But if you know how to navigate and have the right information and have incorporated this into your trade plan, okay, you can grab a little bit of profits off of those little trades, okay? Keep in mind, sometimes these pop up into that range and have the tendency to come back down to a qualified zone, okay? It's like the fake out breakouts because of the speed bump area. All right, I do have a supply on gold, 1966, 1970 range. Okay, there's two zones right there, two small time frame zones. On a 5-minute chart, you can locate those. We did have 30-year bonds already trigger. Still waiting for the Aussie dollar, the euro to get down to the demand zone, while the dollar could get a little pop to the upside. Looking for euro, Aussie dollar, Canadian dollar to go down into demand, okay? I did take a long on soybeans, and currently that one is trading against me. Yeah, come back in, place our stop. Watching the dollar, how that moves. Wow, Kevin, 2 inches of rain, that's a lot. Are you in Arizona too, Kevin? Or Texas, right? All right. All right, so let's take a quick look around our internals. We're seeing that the trend is high while the markets are dropping, okay? We see that there was a sell program. Oh, DC? Yeah, you guys get a lot of rain up there. All right, so taking a quick look at the VIX. The VIX is high. Okay, we're starting to see some of that fear come into the market. We're seeing that advancing issues over declining issues are more on the negative side. So when we see the advancing issues over the declining issues more on the negative side, okay, we're looking for demand zones to enter and go long. Hold on one second. Adjust the lines here. All right, better. All right, we also had some selling come in right at the open, so some panic sellers as the market decides what it wants to do. Dollar is creeping back up towards that resistance. Okay, trend about 1.2. Not really time to buy. We want to see a further move down. Now, today's action as well. Okay, due to the daily ATR, waiting for the leg base break before we take the breakout. Okay. Wow, Goldman Sachs, big time down. Let's change this around, see what the cash value is. Almost opposite of yesterday. So 16 Dow stocks down, 1 up. 15 times 2 is 30. Okay, so price, cash and futures are fairly balanced. Okay. We are currently waiting for a leg-based group of candles to form. I'm going to go ahead and leave the doji tool on here so you can see the leg base. Once that has formed, then we have an area where we can place our protective stop loss. Where's color? Okay. So right now, stop loss at 45.11, 45.12. Okay, we got a leg, base, leg. Now we need one more base candle. So we're still a little bit of time away from that, okay? Before we get the breakout. Okay, once that candle completes, we have another 20 minutes on the 20-minute chart for a base candle to form. Okay, which is going to put us right near the 10 o'clock hour, 10 o'clock reversal. All right, let's break this chart now down. The NASDAQ coming back down to that breakout point. Let's see if we have a leg base group of candles. We'll start adjusting the time frame. 19-minute chart. We have the leg, base, and leg. So we're waiting for another base candle. Just trying to break it down. You know, we're still waiting a few more minutes for that next base candle before taking the trade at the breakout. Okay, waiting for the bear trap on the Dow. Russell's already broken to the downside. Watch for the false breakouts. And no, we still don't have a leg. I dropped down to the 5-minute chart. No leg base group of candles yet. Maybe on, no, not even on a 1-minute chart. Okay, so we did get a break, okay, but we don't have the leg base, excuse me, leg base group of candles to participate in the Russell. Dollar is still creeping up, and we're seeing the equity. See, this is right now we're waiting for, you know, all the traders to panic and all the bad news to get out there. Okay. Now the banks and institutions are just sitting back and saying, okay, let price come to me. Okay. They're waiting for price. We have to be like what the banks and institutions are doing, especially during this time when we're watching that they have orders down there, 35,206, 35,170 on the Dow. We just have to be patient and wait for it. Okay. Yeah, did you guys have you seen, thanks for that, Liz. Did you see that they downgraded a lot of the bonds and for the US? They're no longer AAA plus, they went to AA plus. Okay. And this is in the wake of going from 80% of worldwide transactions using the US dollar down to 59%. Okay. And it keeps going down. Okay, so there's a big battle as the world starts to change off the dollar being the reserve currency and moving either towards digital or moving towards China. Okay. So we don't know who's going to be the next reserve currency, but we suspect it will be China. Okay. But the world currencies are starting to really maneuver in world markets, moving away from using the dollar. Okay. All right. Seeing a little bounce. Okay. All right. Soybeans came back for us with the dollar moving up. Hey, anybody get participating in that one? I know they're kind of boring, but they do work out really nice. And we have soybeans. We also had corn. We got corn up there. Corn is September CU23. Now, I was in corn from yesterday. Okay, so right now, I probably wouldn't take it again. Okay, the price has just drifted right down to that area, and it's not a big strong move off of that. So I'm willing to risk 25 bucks on that to stay in it. Okay. Yeah, we'll see. This is going to be, a move up on this is going to be more predicated by what the dollar is doing. What else? Let's bring up Aussie dollar. Okay, so we're just patiently waiting for the Aussie dollar to drop into a zone. Okay. And of course, we've got a lot of upside potential. Dead space. Down on the tick chart, kind of watching the S&P at the moment and capturing the leg base group of candles. I'm still not opposed to taking a breakout trade. That's just following the rules. I need to have a place to manage my risk. An aggressive trade would be to jump in now. But I think we'll see 3 out of 4 times price will bounce off of a support or resistance level first. Okay. NASDAQ. NASDAQ's a little more aggressive. And we have a new leg base.
Order filled.
I have to give it a lot of wiggle room there. 73. Sorry, that was quick. I know we were waiting for it. Got the breakout. You see on the higher time frames, we don't have a leg base. We're still waiting for the Dow. Let's take a look at the cash value. And now Goldman Sachs is having a huge nosedive. Let's bring up Goldman Sachs. Buyers for Goldman Sachs are pretty low. We're breaking back into kind of a dead space area. Okay, so that could be a substantial move back down for Goldman Sachs. Which will really impact the equity indexes. All right, watch the time. We're just about on, well, we're just past the quarter hour. We're waiting for that bear trap on the Dow. Dollar's moving higher. We're monitoring many different pieces of information as we're waiting for that trade to come to us. Now, the prep screen zones are going to be in the spotlight today simply because of the overnight session, okay? We have expanded overnight Globex range, which really puts a lot of emphasis on the bull trap and the bear trap. In this case, the bear trap to the downside. Okay, we just got to find a way to break into it, and we did so on the small time frame as we got a little breakout stop loss at 15,007 or 373. And of course, we have our prep screen zones over there. Hold on one second. Let me just put that on there. Okay, for the NASDAQ, 15,156. 15,210. Okay, so that's our target down to the prep screen zone. At that point, we want to go long. My data is starting to slow down. I haven't seen that in a while. The NASDAQ still going.
Order filled.
We just get filled on the Dow? Yeah. Watch the time. Now, price is coming down. If you haven't gotten into it yet, just you may want to wait for it. Take it as it starts to leave. If I am stopped out, I will want to take it as it starts to leave as well, okay? I have to understand the risk involved on the trade. Okay, it's still down to 35,170. I can still be stopped out. We do have another zone. Just a little bit lower.
Order filled.
Still want that one. Come on, a little bit lower. That it broke the upper zone where I had my risk managed. I took a little bit of a loss, okay? But we still have that little zone just below at 164, which is approaching right now. We're 10 minutes away from the 10 o'clock reversal. Come on, drop in there, give it to us. All right, we're doing okay on the rest on the NASDAQ. Soybeans working, bonds are going back up. There is another zone on the bonds. It's in a little better location. Okay, taking a quick look at that. I've often noticed that when we have a leg-based group of candles inside a support or resistance area, that they can work for a shorter term trade, not a longer term one. Okay. So the zone just above that resistance is where I really want to focus on. Okay. A short term trade would have got you a nice 1-to-1 off of that leg base group of candle. On Dow. Okay, I'm coming back in at 206. Actually, I'm going to give this just a minute or two. Can't believe it stopped me out with one tick. Anybody get into that a little bit later?
Order filled.
Yeah, Daniel slowed down the whole computer or the whole market. Russell, no leg base, still waiting on it. S&P broke the low, still no leg base, so waiting for that bounce back up. Just kind of watching the stocks. Apple still continues to slide. 7 minutes from the top of the hour. We do have another economic report. Wholesale inventories coming out. Not much to do after that range on crude oil. Well, we can take the boring corn trade. Anybody get into the boring corn or boring soybean? Not so boring now. Yeah, I got into wheat as well. I jumped out of it. Oh man, that came up pretty good. Looks like we have another shot at the wheat. But again, you have a lot of risk on the trade. Soybeans looks pretty good. A lot of upside potential. All right, come on, NASDAQ, another leg down. All right, still waiting for that leg base, leg base. Actually, we do have one here on the tick chart.
Order filled.
Taking some heat on the, move that down. All right, 3 minutes to the top of the hour. Economic report coming in. Okay, we arrived in that zone a little early, so I'm going to look for an opportunity to take a quick trade on this if I am not stopped out. And now that price did get that breakout, we're waiting for that leg base to form again above that breakout point at 1938. Once we have the new leg base group of candles, we can then take the short again. Dollar's still moving up. Have the video right on the support. That Apple looks pretty bearish. Microsoft right on that support. Amazon right on that support. Come on, Dow, give us a bounce. We got 2 minutes till the report comes out. Taking some heat on the Dow. Let's see if we get a knee-jerk reaction on this. I want to get into that at 15,210. Never know what these reports are going to do. One minute for the economic report. Hey, watch the stocks. Futures follow the stocks. I'm watching a 5-minute chart, just seeing if they're turning bullish or not. Okay, Dow coming back. Let's look at IBM, Goldman Sachs. Okay. Not really bullish yet. I may be able to get out with a little bit of profit. Rally, rally, rally. Well, the index are going opposite directions here. Dollar's still in resistance area. Not ready to jump out of the NASDAQ yet, short, because I'm not seeing a big green candle coming in on the stocks. I'm still seeing red candles for the last 5-minute candle. So if we continue to show red on the 5-minute candles here, then it's potential that NASDAQ is going to continue lower. I do want a little cushion on here. I'm back to break even on one, so I'm going to reduce my size of that down to one contract.
Order filled.
And then come back in, place my stop, 147. Yeah, it's really tough mindset to trade the Dow going up while you're wanting the NASDAQ to go down. Right? It's not the way the indexes work. Okay, so it can be a little confusing. But what we're doing is using the stocks as an odds enhancer. As long as the stocks keep moving lower and don't start to change direction, then we should stay with the NQ. Okay. Okay, we've got an Aussie dollar getting close. Yeah, I'm almost halfway expecting that the crude will regain the move back up. I'm also keeping an eye on the tick Q, which is the upticks over the downticks on the NASDAQ composite. We should probably make a reference to the internals. Is the trend high? Okay. Fear is starting to creep in and pushing the VIX up. Okay. So a lot of big banks are starting to hedge. Okay. The more declining issues over advancing issues at the moment. And the tick has not been above zero. It has not closed above zero. Okay, so a lot of information we can gather on this. Now, if the trend was high and the tick was at a sell program and advancing issues, declining issues down here, and the VIX moving up, I'd be all over looking for a long trade opportunity. Okay, but the markets have not started descending enough in order for us the trend to get that high. The big players have not stepped in yet, is what I'm really getting at. Nice bear trap example. Now, you have to be willing to get back into a trade if you've gotten stopped out. Okay. It's not the easiest thing to do. It's easier to say it than do it. Okay. Now, who can tell me what was the better zone? Was it this zone or was it this one? And why? MQ bouncing up. Yeah, let's go ahead and grab the profit on that.
Order filled.
What was the better zone? Zone 1 or zone 2? And why was zone 1 the better zone? Hey, Hammett, I'm glad you got in. When was zone 2 created? Was it created during the regular trading hours or was it in the overnight session? When was zone 1 created? Okay. So knowing the risk involved in taking zone 2 and also recognizing where zone 1 was created. Nice, Liz. Yeah. Maybe I got out of the NASDAQ too soon. All right, I'm going to look to take a shot at the S&P. 44.99 will be my stop loss. That's where we have a leg base, leg base. $44.93 will be that break of that support. Soybean meal. Yeah, soybean meal bouncing off of that support area. If you should form a leg base group of candles, and you could look to take the trade at the breakout. I'm just cycling through stocks, charts, excuse me. Soybeans moving up. Corn.
Order filled.
It's got filled on the ES. With a short trade. Watch the time. We got about 4 minutes for this move down. And then we'll be right at the quarter hour.
Order filled.
We get stopped out of now. Just a bounce. All right, about 3 minutes to the quarter hour. Oh, look at that. S&P is hitting that 88.6% retracement area, 44.87. Still got a few more points to go down. We very often, the reason why I put those lines on there is because we get a good bounce on it. Okay. Now, if the S&P is going to go down to 44.58, that's going to put us right near the prep screen zone, 50-day moving average, and that 88.6. So there's multiple reasons why to go long down at that prep screen zone, not just the leg base. Okay. Now we got to find a way to get into it. Okay, 2 minutes to the quarter hour. Here we go. Come on. Be careful, the dollar's pulling back out of resistance. And we just got a couple minutes before the S&P changes direction. I want to keep a close eye on the tick over here as well. See, once that tick hits 800 and the dollar pulling back out of resistance, and that's one of those extreme areas. I'm watching the tick, which is basically the upticks over the downticks. You got IBM and Goldman Sachs. I mean, this whole picture is telling us a lot of information right now. As long as Goldman Sachs and IBM are moving down, the S&P, but see, we're approaching areas like that. We just got to the 88.6% retracement. We're right on the quarter hour. We're seeing that the tick is getting to an extreme. Okay. There still may be more downside to it, but everything is telling me right now that within the next few seconds, we should start to see a bounce back to the upside. Okay. So that's why I'm watching this closely right now. I would love for it to continue, but it's getting to that extreme point where we've got to anticipate that the rubber band is going to snap back up. Anybody get into the S&P? Yeah, watch the tick. Okay, I'm going to go ahead and take my profit.
Order filled.
Okay, now let's see a bounce. All I need is another leg base group of candles. Nice job, Janet. Janet's feeling aggressive today, huh? Yeah, Caitlin did put a link in the chat again for the Mastering the Charts course coming up. If you're wondering why we pick the levels we do and what the foundational parts of the leg base group candles and what we teach here at the Elite Trade, get involved in that class, okay? Get the foundations down. Now, the live trading room, we just kind of come back and we reiterate what we're doing from the Mastering the Charts, okay? All right, I might have got out a little too soon, but the signals were there, okay? I don't have a zone to go long yet. NQ coming down to the area. Let's see, we did have Aussie dollars still out there. Soybeans and corn. Okay, still have a little profit on those. Waiting for gold to pull back up. And we're watching the internals. Again, another sell program as price dropped down, the tick got into that area. And now we're seeing that bounce, okay? So once that tick, okay, and all this measures is the New York Stock Exchange, up ticks over down ticks, okay? Now, if the market's dropping, we want to see more down ticks keep coming into play. Okay, but they have an oscillator, kind of like a tachometer. It gets to an extreme, and you want to shift gears. Okay, now this is on the whole New York Stock Exchange. When we're monitoring IBM and Goldman Sachs, that may not be enough. Okay, it can give us a good indication of what the S&P 500 or the Dow 30 is doing. But when you have the whole weight of the New York Stock Exchange getting more down ticks and down volume than up ticks and up volume, okay, then that has a little more weight. We have one Dow stock up over 94 cents, and right now we have 20 that are down. So 19 is the net result, which would be cash equals negative 38, while S&P futures are down 50. A 1% drop, okay? A distribution day, if you're an IBD, or Investors Business Daily fan. Anytime the markets drop 1% or the indexes drop 1%, it's a distribution day. Now, we've had 2 distribution days, and if you have multiple distribution days over a 10-day period, the markets are liquidating, okay? That doesn't necessarily mean you start shorting at that time, okay? And if we've had more than 2 or 3 distribution days, it's pretty much over, okay? So by understanding the facts that that Investors Business Daily, okay, IBD, understanding that they do monitor the distribution days versus accumulation days, okay? Now, generally, if there's 2 or 3 distribution days, a 1% drop on the equity indexes, it's pretty much dropping right into a demand zone, okay? You can use Bollinger Bands, Keltner channels, all of those things to see that we might be at in an extreme area, okay? We're starting to bounce off that 88.6, which is a 44.87 area. Okay. It didn't go into a zone, so I don't have an entry to go long. Okay. But the Dow is still, the Dow took it out. Okay. So no longer a zone on the Dow. Next ones I have to wait for are 35,016. Russell, waiting for the drop. Yeah, they want 5% from the high. It's the right time of year to do it. Okay. Historically, the August, September, October are low points for the market. Okay. Anybody stay in the short on the S&P? All right, so we're still waiting for the NQ to come down. We got 15,210, which is a prep screen zone. S&P, long ways to go. But keep in mind, right now, futures are oversold relative to cash. They're oversold by about 20 points. We want to pay close attention to that 50 simple moving average, okay? Now, Chris just made a really good comment in the chat about they want a 5% drop. So what does 5% drop look like from the high point? Measure it out. Percent drop. And let's make this a little bit there it is. Okay, so we have that 5% drop takes it down to 4,400. An 88.6% retracement. And you probably could locate a leg-based group of candles somewhere in that general area once you start breaking it down. Nice job, Daniel. All right, Apple's moving back up, so we'll probably see a little bit of a relief as we approach the 10:30 bottom of the hour, which is kind of the end of our trading session. Okay. But we do have Mastering the Charts come up. Mastering the Charts recap and review, which is part of the follow-up we do after the Mastering the Charts course. Okay. What I want to keep everybody in mind about, just bringing that up. We do have some specific topics that we're going to be looking at. Sorry, I blew that up just a little bit too. Today, we're going to talk about the buy territories and sell territories. And then, tomorrow is going to be a really cool topic, structure variations. Okay. So last week, or last couple of weeks, their recordings are posted. Desired outcome of a trade. How do we do that? How do we locate that? What is the process? Okay. Locating support and resistance using the leg-based group of candles. Where is that leg-based group of candles located? And then today we'll kind of do a review of the first two, and then we'll go into the buy territories and sell territories. Now, what I like is a good, solid understanding of the structure and the variations of those structures, because they help us identify the outcomes, okay? Now, these are not all set in stone. These are just topics that come up occasionally that we want that students are making requests for. Okay. And if you do have anything that you would like to request as far as continuing your education in the Master in the Charts review and recap, just send us an email to the elitetrade@gmail.com and let us know what topics you would like us to cover, and we'll put those on the list. Yeah, Caitlin and I really want to support you guys in following up in trades. That's why we do the live trading room, and that's why we do the Master in the Charts review and recap, because you're not going to remember everything from one class, okay? So it takes a little while, and it does take some practice. All right, looks like most of the session is up. We're waiting for price to come back up to some zones. Not a bad little trading session. I still have soybeans and corn, which was still up a couple $100 on. I think that's the only ones I have other than my Bitcoin future. I have Bitcoin and also have Ethereum September contracts that I'm watching. If you use TradeStation, the micro Ethereum Bitcoin is only $57 a contract to hold overnight. Okay, so I've got a couple of those small bits, and I think micro Bitcoin is a little different as far as the margin requirements. But I wanted to participate in those just to get a better feel of them. Okay. At this point, I'm going to go ahead and pass the mic back over to Caitlin. We'll do a quick wrap up. I do want everybody to make sure that you take a snapshot of the prep screen zones. Okay. And get those zones plotted, because there's going to be another opportunity. And looks like NASDAQ and Russell might be the first ones to get to those opportunities in the prep screen zone. Okay. Yeah, nice recovery on the CL. Good job, Daniel. Glad you're back. All right, Miss Kate, passing the mic back over to you. And I'll stop soon.
Jeff, great job, everyone. A tremendous amount of great trades that Jeff was going through today. So make sure you do sign up for our 3-day Master in the Charts event. I posted a link in the chat. If you are interested, just make sure you save that link to your desktop, because it is a private link. That page isn't located on our website publicly for other people. It's just for you guys in the live trading room. So make sure you take advantage of that special pricing. I'll post in the link one more time. Again, just make sure you save that and register using that link, since you won't be able to view it on the website. As Jeff mentioned, that does include the 1 month of follow-up in the recap and review sessions, as well as the Discord group sessions. So looking forward to seeing you there. That is going to be coming up in, it looks like 2.5 weeks, August 26th, 27th, and 28th, 9 a.m. to 4 p.m. Eastern time. And as always, you do get all of the recordings included. So looking forward to seeing you all there. Let's bring up our charts and our recap screen. So, actually, I didn't post it. 1 second. Okay, so that's going to be the private link. All right, so recapping, starting with the S&P. Again, we didn't have any really good sell zones from the overnight session, but we are seeing this pretty big move to the downside. Got a couple trade opportunities. Keep in mind, as Jeff mentioned, as we are pulling back lower, monitor where we have our prep screen buy zones. As price gets closer to these, we want to monitor as price is intersecting these areas. Is it coming into them on the quarter hour, the 10 o'clock reversal, things like that? Also, is the trend pushing higher? That's one we'll want to continue to monitor to anticipate when the markets are going to be moving to the upside, just like they did yesterday, and we got that move higher. So currently pulling back lower, nearest buy zone is down at 4455.25. And then sell zone is going to be up a little bit further. So really just looking for ways to splice into this move lower. S&P, we don't quite have the 3 touches yet, but I think some of the other equity indexes may have some better setups. Coming over to the NASDAQ. It's doing a little bit higher time frame just to see where we're at on the 4-hour charts. So this was from our prep screen. Jeff got into it, me as well, as far as the prep screen trade. So make sure you take note of our prep screens each morning, the equity index one, as well as the commodities one that Jeff and I post before the session start. This was our breakout trade on the NASDAQ. 15,318 was our entry. Currently price is 15,279. So we're having a nice move to the downside from that breakout trade. We're getting pretty close to our 10-minute buy zone now. So take note of our 10-minute buy zone within our buy territory, getting pretty close to that, down at 15,210.5. So about 65 points away till we reach our opposing 10-minute zone. Again, we're not seeing a significant amount of buying coming into play just yet. That's where we'll want to continue to monitor the trend. We are actually pushing higher. Currently, we're at that 1.68 mark. So anything above 1.5, we're starting to see more buying coming in. So again, watch as the trend is pushing higher. The markets are dropping, at NASDAQ approaching our 10-minute buy zone. We'll look for price to change direction if there are a significant amount of unfilled orders at this point. That's the NASDAQ. Again, breakout short underway, and the nearest buy zone is going to be about 60 points away. Coming over to the Russell. Looking forward to seeing you there, Hamid. Alrighty, Russell. We got the breakout on Russell as well through the dead space. So we went over this one as we started our session, but always take note of where you have those dead space areas. We did have it marked to the left-hand side of our charts. On the Russell, 3 touches on the top, 3 on the bottom. Price just broke right through that dead space. So we got to bounce that last test of support, ultimately breaking through the dead space, and we're looking for our next buy zone. That's going to be down a little bit further, 1917.5. Stop at 1912.7. And we had the breakout through the dead space, through that support, approaching our next buy zone. And then lastly, the Dow. Dow's going to be the next setup. So looking for that third test of support, which it looks like we're getting now. So on the Dow, we had our consolidation. We came down, tested it once, twice. We're at that third time now, right at that support level. So we need to see if we can get a bounce up, form the leg base group of candles. Then we can look to take the breakout trade to the downside into this pocket of points, which is just below that support level. I'm just going to drop it down to the 1 hour to get some more detail. But it helps seeing where we have, again, that consolidation. First test, second test. We're not getting that bounce quite yet. So just wait at this point. We do need to see minimum of 3 tests of support, the leg base to then take the breakout. We're missing that third test at this point, but we do need it, again, to find the leg base and know where we're placing our stop at. Below that, as mentioned, we have our pocket of points down to our next opposing buy zone, 34,734. And then I'll end it on crude oil. Zooming in. So our buy zone's been working out pretty nicely. I was looking for this to be a shorter term trade just due to the location. You'll notice to the left, we don't have 1, 2, 3 touches in the breakout, but we did have the leg base group of candles present. Price came back down, changed direction. As we move higher, keep an eye on our sell territory. So price rallying up into a sell territory. This is where we're going to be looking for our sell zones within our sell territories for the next short trade entry. I would just say overall though, higher time frame trend is to the upside on crude oil. So taking short trades is going to be a little bit more elevated risk. So keep that in mind as we continue to watch crude oil. Take a screenshot of our recap screen. If you have our prep screen, the buy and sell zones are going to be the same as those. The only thing that's different is that the breakout trade on NASDAQ is underway. The next one that we'll be looking for is the Russell or the Dow. I think it was the Dow. Yeah, so Russell is underway, NASDAQ is underway. Last one is going to be that Dow breakout trade, but we do need, again, that last bounce off the support to then take the breakout trade into the pocket of points. Alrighty, Jeff, anything else you want to add before we wrap up today's session?
Yeah, I just posted a link for the Discord room. Want to point out that, some of the information that's shared, especially on Tuesday evening and Wednesday evening, Tuesday and Wednesday that are posted in the Discord, where Chris gives us some insight on the crude oil and natural gas reports. And last week was a phenomenal trade using that information from the EIA and the API reports that came out after market close to tell us what the crude oil inventories are going to be for on Wednesday. Okay, so make sure you're a part of the Discord community room. There's a lot of information, a lot of things shared in there, and it's a great place to get to know your classmates and the people that you're around, and just to share educational trading ideas. I do want to point out and want to give a shout out to Don in the picture perfect past trades. He's just been knocking it out of the park with posting picture perfect trades off on that. Okay, and keep up the good work. Not only Don, but Matt doing with the stocks. Thank you for posting in there. You guys have been doing great. And thanks, Chris G, for all you do in the crude oil and natural gas reports for us each week. So yeah, just a lot of stuff in our community room, the Discord community room. So please be part of it. Jump in, share your ideas, and hang out with us when the live trading room comes to an end. Okay. Everybody have a good trading day. We'll see you in about an hour over in the Mastering the Charts review and recap, where we'll do a recap of the live trading room, and we'll do a short little lesson, and we'll come back to doing the 5-step process that we cover in the Mastering the Charts course. Okay. Yeah, get signed up if you haven't signed up for the Mastering the Charts 3-day course, which is coming up in about 2.5 weeks. Okay. Refer your friends and family. All right. I'm done for that. I'll see everybody in about an hour. Thanks, everybody.
Bye, everyone.